Hey folks, welcome to a product review at Finominal. Today we're going to analyze cows. Now, I don't mean the animal, I mean the ETF. Now, what I'm talking about is Pacer's US Cash Cows 100 ETF, which has the ticker COWZ. Now, the ETF tries to select the top 100 stocks based on free cash flow yield out of the Russell 1000 index. And it's worth mentioning that this is an ETF that has accumulated quite a bit of AUM and currently stands around 22 billion, which makes it one of the largest ETFs with kind of like a focus on certainly on cash flow, but if you want to like classify it within value cam, also within that. Now, let's kick off with a performance benchmarking exercise and to see what has attracted all these investors to these ETF. Now, we're going to use our alpha analyzer tool. And effectively what we see is that the suggested benchmark is the Russell 1000 value index. Now, we do know that this ETF selects the top 100 stocks out of the Russell 1000. So we're also going to add that. Now, what you can see over here is we can see also why the Russell 1000 value index is appropriate because of a high R squared, no tracking error, and high correlation. But more importantly, we can focus on the performance, and specifically, let's focus on the exit returns to the benchmarks. So here we can see the exit return of COWZ versus the Russell 1000 value index, so the suggested benchmark, and we can see it's pretty much in line until the end of, well, actually the beginning of COVID, 2020, where COWZ started to outperform significantly. Having said that, compared to the Russell 1000 index, which is where the stocks get selected from, there has been almost no outperformance. So good from a value perspective, not good from a general perspective. Now, let's see in terms of what has been driving this ETF from a factor perspective. So over here we see the factor betas over time. And this is basically a returns-based factor exposure analysis. What we can see is that there was consistent exposure to the value factor and consistent exposure to the size factor. I meaning the median market cap was smaller than the Russell 1000 index. We also see kind of like exposures to momentum, low volatility, and quality that range between positive and negative. Now, it's worth mentioning that if you compare this profile to other funds, that the factor exposures were quite time varying, which does mean a little bit it's tough getting a grip on what this fund is doing at any given point in time, because it might mean small caps or no small caps, for example. Now, moving on to alpha, like what's the value created within the fund. And what we're going to focus on, first of all, the outperformance consistency compared to the Russell 1000 and the alpha consistency. Now we see from an outperformance consistency, only 2 out of 9 years, COWZ actually outperformed, which is not so great. And we can see even from an alpha perspective, that means after stripping out all the effect exposures, we only see that there was an alpha generation in half of the years. Now we can also look at this over time. So initially the alpha generation, which is like the yellow columns, was negative, turned slightly positive, but this is cumulative, and as mentioned, it only occurred in 4 out of 8 years. So if we move further down, we can see effectively there was a lot of alpha creation post-COVID, but negative alpha generation before that, and also the last 2 years. Now, that's in terms of COWZ itself on a standalone basis. Now, as the next step, let's have a look in terms of how COWZ has performed versus its peers. Now, the tricky part is to actually decide what are the peers. And what we're going to do is we're going to take 2 value ETFs, and specifically ones that are relatively concentrated from a portfolio perspective, because we also know that COWZ is quite concentrated. And we are, in addition to that, we are going to add 2 dividend growth ETFs. Now, the reason for adding the dividend growth ETFs is that usually when you try to evaluate if companies can increase their dividends, you also do focus on kind of a combination between value and quality. You want to make sure that they have sufficient cash to distribute dividends. You want to make sure that they have been growing dividends consistently, which is all a function of having a healthy and cash flow producing business. So let's run this on a tool called the Asset Comparer. And what we do see as a first step, the performance since 2017, which is when COWZ was launched. And we do see that a very clear differentiation between the 2 bottom ones, which are these value-focused ETFs, one from Invesco, one from iShares, and kind of COWZ, which has performed much more strongly, as well as the dividend growth ones. Now, what's kind of interesting if we move to the style boxes to see how we can think about COWZ from a factor exposure perspective. And previously we looked at the factor betas from a returns-based analysis. Now we're looking at it simply from a holdings-based factor exposure list. So this is a snapshot of the portfolios of these ETFs as of today. Now, what we do see that COWZ is relatively similar to those value ETFs. If you look at it from a valuation perspective, i.e. these are cheap, and from a market perspective, which is low, means you have a bias towards small caps. We also see that from a kind of like momentum perspective and volatility perspective, these tend to be more volatile, these stocks, within COWZ and the value ETFs. And the momentum tends to be on the lower side. In contrast is if we look at other metrics like growth, either from an EPS perspective and sales, you can see now that growth is more affiliated with those dividend growth ETFs. And we can see the same thing on quality metrics, where we look at profitability and we look at quality, where the value ETFs are high leverage and low profitability, versus COWZ sits more squarely with the dividend growth ones. So it's kind of interesting to think about that COWZ effectively represents a mix between value and quality. Now, in case you are looking for a cheaper alternative, because you might like that exposure, there's actually one that comes to my mind that provides exactly that exposure, and that would be Alpha Architects COWZ, which is quantitative value. Now, it is worth mentioning that from a pure performance perspective, COWZ has underperformed the COWZ in this period in 2020, post-COVID. Having said that, if you change that perspective either before or let's say over the last years or so, performance was almost identical. And more importantly, from a style perspective, you get the same exposure. From a, both are cheap and small caps. Growth is positive actually in both. Momentum is better for COWZ, and profitability also look quite similar. And of course, COWZ is cheaper at 29 basis points versus 49 for COWZ. So this kind of summarizes our review of COWZ. Now, just as a recap, the appropriate benchmark would be the Russell 1000 index, value index to be precise, which it did outperform. Having said that, it didn't outperform its universe, which is the Russell 1000 index. And so that's not that great. If you do still like the exposures in the sense of these quality and value metrics, there's a cheaper alternative with a product from Alpha Architect. That's it. Hope this was useful. Have a nice day.